Good morning, I'm Maiki Oreta. From markets to policy, from Manila to the world, we cut through the noise so you can navigate, adapt, and lead. This is Business 360. Diesel prices are set to surge up to 170 pesos per liter starting tomorrow. London-based BMI, a unit of Fitch Solutions, downgrades its Philippine growth outlook to 4.7% amid the conflict in Iran. Local markets resume after the Holy Week with the peso opening at 60.55 to the greenback and the Philippine Stock Exchange Index below the 6K mark. We take a closer look at the market environment with Phil Hagadorn of the Atram Group. It's a new week and motorists are again facing another sharp fuel price hike. Starting tomorrow, diesel prices are expected to go up by 17 to 19 pesos per liter, while gasoline may increase by 4 to 6 pesos per liter. At these levels, diesel could reach as high as 170 pesos per liter, marking the fifth straight week of increases since the war in Iran began. This is the reality. Even if oil shipments move freely through the Strait of Hormuz, that does not automatically mean lower prices at the pump. The Department of Energy, or DOE, is making that very clear. Global markets still call the shots. Energy Secretary Sharon Garin says the deal helps prevent worst-case supply disruptions, but it does not remove the pressure from high global oil prices and the ongoing geopolitical risks. And for Filipinos, that means fuel costs could stay elevated with direct impact on transport, food, and prices, and overall inflation.
Ang presyo po kasi hindi naman dahil yan, di ba, iniisip kasi natin na kung maraming supply, bababa yung price. Pero hindi po nangyayari kasi sa international market yun eh. Yung nangyayari sa Pilipinas, kumukuha tayo diretso from the Southeast Asian countries and also from the Middle East. So kahit man i-allow tayo or maraming supply, the price, how much we get it from the other countries, ganun din, umaakyat din siya eh. Sobrang, actually, this past week, umaakyat pa rin siya eh. So hindi siya assurance na bababa yung presyo. Ang assurance lang ng access natin sa Strait of Hormuz, as mentioned by DFA and with their talks with Iran, is that at least mabibigyan tayo at meron tayong access doon. It's the assurance of supply. Kasi wala tayong pag-uusapan na presyo pag maubusan tayo ng supply.
As pressure builds to ease fuel costs, Senate Pro Tempore Ping Lacson is sounding the alarm on the fiscal risks. He warns suspending the value-added tax on petroleum products could cost the government more than 320 billion pesos in lost revenues. In a radio interview, Lacson says while the move may appear to help consumers, it could undermine economic stability if not carefully studied. He adds, even suspending the fuel excise tax alone already results in around 200 billion pesos in lost government revenues. And any relief from lower taxes may not be felt immediately, with impact possibly delayed until June. Lacson also signals support for joint oil exploration with China, but under a strict 60-40 ownership structure as required by the Constitution. He notes the Philippines currently lacks the technical and financial capacity to fully explore the West Philippine Sea on its own. Senator Amy Marcos is proposing zero income tax for workers earning below 500,000 pesos a year. Under Senate Bill number 2005, Marcos wants to raise the income tax exemption threshold to 500,000 pesos annually from the current 250,000 pesos. The bill also proposes to increase the tax-exempt cap for bonuses and benefits, including the 13th month pay, to 200,000 pesos. She says the measure is meant to help workers keep more of their income as living costs continue to rise. As global risks build, Senator Sherwin Gatchalian is now raising the possibility of a Bayanihan 3 if the Middle East conflict drags on and economic pressures intensify. He says the proposed package could include targeted cash aid alongside a temporary loan reprieve on credit cards, including zero interest for 1 to 2 months. But this comes at a cost. The Chilean estimates the government may need an additional 60 to 400 billion pesos to keep relief programs running under a worst-case scenario. And the big question now, how much fiscal space does the government really have if this crisis drags on? The risk is no longer just higher prices, it's a more dangerous combination. The Maharlika Investment Corporation, or MIC, is now warning the Philippines could be heading towards stagflation. That means weak growth, high prices, and rising job losses all at the same time. MIC President and CEO Rafael Consing Jr. says the current trajectory is pointing in that direction, especially if higher interest rates start to collide with weakening consumer demand. He notes surging oil prices are already pushing up costs for both households and businesses. Consing adds temporary government measures may offer only limited relief if energy prices remain elevated. He also flags risks to remittances, warning that overseas Filipino workers could be affected if global conditions worsen. Tensions are escalating fast in the Middle East, with U.S. President Donald Trump now threatening direct strikes on Iran's critical infrastructure. He warns the U.S. could act if the Strait of Hormuz is not reopened by Tuesday evening Washington time, Wednesday morning here in Manila. Trump says Iran would be, quote, living in hell if it fails to comply. Iran is pushing back, warning it will retaliate against any attack on its national infrastructure. Officials say their forces are already ready to strike U.S.-linked assets in response to any aggression.
Our armed forces have made it clear that in case Iran's infrastructure is attacked, we would react in kind. Our armed forces would target any similar infrastructure that is owned or in any way or manner related to the United States or contributes to their act of aggression against Iran.
OPEC Plus, the alliance of major oil-producing countries led by Saudi Arabia and Russia, is moving to stabilize the market by raising output amid the war in the Middle East. The group has agreed to increase production by 206,000 barrels per day starting May, following a review of market conditions. But the signal is mixed. Members warn that attacks on energy infrastructure and threats to key shipping routes continue to strain supply and delay any meaningful recovery. OPEC Plus is set to meet again on May 3rd as the conflict involving Iran keeps oil markets highly volatile. More stories when we return. Business 360 will be right back. With the Philippines still highly exposed to global oil shocks, the government is now moving to build energy security from within. President Ferdinand Marcos Jr. has signed 2 new petroleum service contracts aimed at reviving a dormant oil field and exploring a lower carbon energy source. The deals bring total awarded contracts under the administration to 12, pushing active petroleum contracts in the country to 22. Service Contract 89 will restart the Alegria oil and gas field in Cebu after 3 years of dormancy, while Service Contract 90 covers natural hydrogen exploration in Leyte, targeting ophiolite rock formations seen as potential sources of zero carbon energy. The strategy is clear: revive domestic supply in the short term while laying the foundation for cleaner energy. But here's the reality. These projects remain small relative to the country's total energy demand. So the bigger question now is, can they scale fast enough and soon enough to meaningfully reduce our dependence on imported fuel? Or will the country remain vulnerable to every global oil shock? A critical power risk is emerging as Semirara Mining and Power works to maintain output amid a tight coal supply situation and an expiring contract. Semirara President and COO Maria Cristina Gotianon warns water intrusion could force operations to stop within days if not properly managed. The company supplies about 35% of the country's baseload power and accounts for 97% of domestic coal output. Its mining concession expires in July of 2027 and will be put up for auction this year. Semirara remains eligible to bid with results expected about 30 days after submissions. Gotianon says any production interruption would sharply cut baseload supply, the cheapest source of power, and that would likely push electricity prices higher, a direct risk to both households and businesses. As the Philippines moves to rebalance its energy mix, investments are following. Approvals have surged to 47 billion pesos in just the first 2 months of 2026, driven largely by renewable energy projects. The Board of Investments cleared 35 projects from January to February, a sharp jump from just a year ago. Foreign investments also increased to 3.1 billion pesos. The energy sector accounted for 22.4 billion pesos, or nearly half of total approvals, with renewable energy dominating February at 20.4 billion pesos. Officials say this reflects stronger investor confidence and growing interest in clean energy and long-term development sectors. But the real test is how fast these projects move from approval to actual power on the grid. The global oil shock is now feeding directly into the country's growth outlook. BMI has cut its 2026 GDP forecast to 4.7% from 5.1%. The firm is now factoring in crude prices at $130 to $150 per barrel, driving up local fuel costs. BMI says rising energy prices will weigh on consumption and push up inflation, which is now seen at 3.6%. While government measures and steady interest rates may offer some relief, they are unlikely to fully offset the pressure. The firm also warns early year growth momentum is unlikely to hold as external risks continue to cloud the outlook. And for us, that means a more difficult balancing act ahead between supporting growth and containing inflation. As energy risks rise, our government is now reassessing how companies operate. The Philippine Economic Zone Authority, or PEZA, is urging firms to adopt up to 50% remote work to help conserve energy. The move follows a directive from President Ferdinand Marcos Jr. to reduce energy use and prepare for possible supply disruptions amid the global tensions. PEZA is also seeking approval from the Fiscal Incentives Review Board for up to 100% work-from-home arrangements, particularly for IT and business process management companies. In the meantime, firms may apply for a letter of authority to implement partial remote work as a temporary measure, a shift that could reshape workplace strategies if energy risks persist. A high-stakes family feud is escalating, with First Gen defending multi-billion peso deals and pushing back against allegations from a rival Lopez faction. First Gen says it could not disclose early details of its 125 billion peso transactions, with Enrique Razon's Prime Infra citing strict disclosure rules that require equal access to information for all shareholders. The company adds the deals include a 50 billion peso stake sale and a planned 75 billion peso investment, both reviewed and unanimously approved by its board. First Gen maintains its actions are fully compliant with disclosure regulations and aligned with its long-term growth strategy. But the bigger issue now is no longer just the deals, it's governance and trust, and as this internal conflict plays out in public. We're taking a quick break. Business 360 will be right back. The peso is back under pressure as trading resumes after the Holy Week break. The local currency opened at 60 pesos and 55 centavos to the dollar, weaker than Wednesday's close of 60 pesos and 16 centavos. However, it remains above the record low of 60 pesos and 75 centavos recorded just last Tuesday. The driver remains the same. Escalating Middle East tensions are pushing investors towards safe haven currencies, adding pressure on our peso. Now let's check in to see how local markets and regional markets are doing this Monday morning. Right now, as of 9:50 this morning, the PSE index is trading to the downside at 59.59. Volume is at 198 million shares valued at 1.3 billion pesos. Market breadth bearish with 76 decliners, 46 advancers, and 82 stocks unchanged. Taking a look at other markets in Asia this morning, the Nikkei 225 is trading to the upside, up by 1%. Hong Kong's Hang Seng Index down by 0.7%. Shanghai's Composite down by 1%, and Singapore's Straits Times Index higher by 0.3%. Now, as our backdrop is getting more challenging, as global oil shocks, a weaker peso, and inflation is starting to accelerate, in this environment, we're seeing a shift in the equities market. Fewer companies are staying listed on the stock exchange, with more delisting and no clear entrants in the pipeline. Right now, more companies seem to be finding better value outside the market than inside it. So is this just a market cycle or something deeper? Joining us now is Phil Hagadorn, the Chief Investment Strategist of the Atram Group. Hi, Phil. Thank you for being here with us.
Thank you, Maiki. Thanks for having us today again.
Okay. It's always good to have you guys at Atram. Let's get a read on the economy. All things taken into consideration, the current conditions, how is our economy holding up, Phil?
Maybe it's a bit early to say, obviously, the impact that these higher energy prices are going to have on us. Clearly, it's not good, right? I mean, there's going to be higher inflation. There's higher energy costs. We're seeing that already. And so, we think the impact, we were already expecting a fairly slow GDP growth this year, slower than what we would normally expect. I think that's just going to be delayed probably even further with this crisis.
Yeah, even before this oil shock, momentum was already soft. 4.4% for 2025, also given by, but we've had, hiccup would be an understatement, but the Trump tariffs. We've had the flood control corruption scandal, and now this oil shock. Yeah. We always have to, it seems that we're always having to restart. What's your take on this?
I think it's, we've had a couple of, head fakes, I guess, if you're a basketball fan, over the last few years, right? With these false starts of the market. Even this year, we had a pretty good start to the year where people accepted the reality of a slower economy this year already. I think they expected that we would have a back-ended, stronger back end versus the front end. And because of that, we saw people putting money in the market. Stock market was up above 6,500, 6,600 in the first couple of months of the year. We had big, strong inflows, something we haven't seen in many years. So notwithstanding the outlook not being that great for this year before the crisis, there was still a positive view. And that's just been set back, I guess.
Yeah, a setback. Talking about that, we're now seeing the classic ingredients of stagflation: slowing growth, rising inflation, and weakening labor conditions. These are all the right ingredients, but duration matters a lot. The Maharlika Investment Corporation, or MIC, they warned that the Philippines may be headed towards stagflation. What are your thoughts on this?
I mean, like you say, the ingredients are there. If we're still talking about this same situation 6-8 months down the road, then I would say, okay, then we're really in deeper waters.
Yeah, so it's all about the duration and the length of being in this.
Right. I mean, this is something that's a shock. As we've heard, there's not a lack of oil in the world. There's an issue of
just price.
Price today because of this conflict. So hopefully that price settles down sooner rather than later. And what dictates that is going to be a de-escalation of this conflict.
Yeah, hopefully.
Unfortunately, this week that's not going to be the case, right?
We'll see. Trump has given Iran a deadline for that Strait of Hormuz.
We're all
just
prepared
all
for that this week.
We just all have to see how it pans out and just react to it. In the meantime, inflation. March estimates are at 3.8%. Analysts expect 3.8%, up sharply from February's 2.4%. As pressure is building. What are your thoughts on these figures and the quick rise?
So don't get shocked. It's going to happen. And it can even go above 4 or 5% in a 1 month period, right? The more important is the longer term trend.
The average.
So what's the average for the year? We started the year at 2%, 1.8 to 2%, started to move up a bit.
Yeah.
We think that, again, our base case is this doesn't last too long, 6 to 8 months. The price of oil at $90 to $100 during that time. And that, on average, should keep us in the 4%
So in some months,
range.
inflation is expected to
you're
spike.
going to see them
What's
spike.
important is the general average for the year.
General
if it
average,
stays,
and we can keep that, hopefully, by the second half of the year, they're countering the average again. No? But we'll have to wait and see how that
if it stays within the BSP's 2 to 4% range, even if it's at the upper end, what are your thoughts on a rate hike?
Yeah, there's been a lot of talk about rate hikes, and we think it's not the right time. I mean, until you see maybe inflation really skyrocketing above 4%.
It's a difficult situation to juggle. They've got
to
grow the economy at the same time, rein in inflation at a very difficult time globally.
And, again, the outlook for this year was interest rates on their way down. So has enough changed for that narrative to
For as
to
long
be
as it's
replaced.
within the 2 to 4% band of the government,
on average,
you're not expecting a rate hike.
Don't expect a rate hike.
Yeah, because
with
growth
those
we
conditions.
need growth. Speaking of growth, BMI of Fitch expects 4.7% for the year. The World Bank 4.6%. How do you think this oil shock has materially changed the outlook for growth for 2026?
Yeah, well, again, when you look at the inputs and what drives our growth in this country, so consumption is number one. And that is at risk at the moment, right? With these higher oil prices. One thing that we're comforted by is that, at least historically, the OFW remittances are very sticky. Even in oil crisis
BPO,
times, they've been pretty sticky. And then the BPO business is still good. Our unemployment rate has shot up a little bit, 5.8% now. But most people are still employed with work. This is not COVID. I mean, COVID, many people lost their jobs. Unemployment number was well above 10%. You know, this is not COVID. So as long as those, again, if hopefully this doesn't last too long, but if that remains intact, then 4% growth is definitely possible.
Yeah, and that, and at least there's still growth. Got to point that out.
Oh, 100%.
There is still growth.
We're still
Single
growing
digit, but there's still growth.
Well, 4% is among the fastest in the world, right?
Yeah.
So-
Okay. I want to ask you about business behavior, capital allocation, how things are on the ground. So, Phil, you talked to top CEOs, captains of industry, at SEC and JASA. What's the read on the street? How are CEOs, talking about this
I
environment?
think the general view is right now of caution, of looking at where you can control costs at the moment, because, I mean, we all have budgets to hit, right? Every year there's a budget, there's a plan. Are people changing those plans today? I don't sense that those plans are being changed at the moment.
At least not yet.
Not yet. We're just about to finish we just finished the first quarter. So we'll see the first quarter numbers come out. And then that'll be the opportunity for companies to come out and say, will we recalibrate or not?
So it's too early to call it a bad year. It's too early to say.
I think so. I think it's still, you're going to see growth. We're expecting growth in our income. I mean, we're looking at 8% earnings growth for the PSEI in general. We're more optimistic on the consumer companies before the crisis. We thought this year was going to be a good year for them, and it still could be. So we still favor some consumer companies in our portfolios. But clearly right now, the utilities, those are going to be the ones that are going to be gold miners, those are going to be the ones that are going to be interesting and probably be able to withstand this volatility.
Yeah, as we ramp up exploration in
Well, we should,
minerals
right? I
and-
mean, this is what we have. We have these natural resources, not just under the ground, but we have wind and rain and sun
Yeah.
to continue to diversify our energy portfolio, right?
Absolutely.
As we've done. I mean, today 60% of our reliance is on coal, only 1 to 2% on diesel. So geothermal, I mean, the renewables is 20% already. So that's the right direction.
Yeah.
We just need to speed that
We
up
are
a bit.
looking to explore more to create a deeper energy mix. On another front, I want to ask you about a couple of developments that we had. Senate President Pro Tempore Ping Lacson warning suspending the value-added tax on petroleum products could cost the government more than 320 billion pesos in lost revenue. What are your thoughts on this?
Yeah, I wouldn't. I mean, that is an anchor for us at the moment, for the country.
Yeah.
We need it. So I would not use that lever.
Okay.
Excise tax is another issue. I think that one, it's more about the execution and how that's done. But, I think we need to collect taxes because one thing we don't want is for our ratings to get bad. I mean, right now we're rated quite well, triple B rating. We want to continue to maintain that rating so we can borrow at relatively cheap compared to other countries in the world. And so, I think suspending value-added tax, it would mean suspending the whole thing, and that we cannot do.
Would be a mistake. Okay. Another thing I wanted to ask you about. Senator Amy Marcos is proposing zero income tax for workers earning below 500,000 pesos a year. What do you think about this incentive to keep people below 500,000 a year?
I mean, let's think about plans to elevate the lives of people, not
keep them.
I mean, I know what they're trying to do right now. It's hard times, etc. But, the idea should be to elevate the poor and to reduce poverty.
We want them to earn more.
You
to
give an
want to earn
incentive
more.
to stay at that level, baka dyan na lang tayo, di ba? Walang tax.
Yeah, that's crazy. Okay, in this environment, for people, how do institutional and retail investors make money, Phil?
Well, fixed income. I mean, you saw
It's still interesting,
it's still there. Fixed income has good returns. The peso has been well behaved, I think, even with all of this craziness going on. At 60 to the dollar.
We opened at 60.55
Still
today.
a fairly well behaved currency. Our stock market has reacted like many other markets in the world, but you might be surprised to know that from a year to date perspective, we're better performing than many of our Southeast Asian neighbors. No? Indonesia's down double digits. We're down, with today's drop, probably 1.5% year to date.
Okay, which is not that.
Which is not that bad considering this crisis we're facing. at the
Okay,
moment.
another thing I wanted to get your insights on. We're seeing companies exiting the Philippine Stock Exchange, Asian Terminals, Robinson's Retail Holdings, following the likes of Metro Pacific and Eagle Cement. What's the common thread here, Phil?
Well, I think these owners have the right to do what they think is right for them and their shareholders. The problem with a lot of these opportunities when they go private is many of the minority shareholders get left out, right? They're having to force to tender their shares.
And then all of a
They
sudden,
don't want to end up in a private company where, who knows what's going to happen. But a lot of the motivation for going private is because there's a deal outside looking to happen.
Yeah.
And that deal, that generally, in most cases, doesn't include the minority shareholders.
Okay,
right?
but at the
So-
same time, we lose depth. It's not good for any company to leave the
Yeah,
stock
it'd be
exchange.
bad. You want people to stay listed. You want shareholders to benefit from the plans of the company moving forward. Hopefully, the incentives to stay listed are there from the tax side. It's
Are the incentives
well, there's
to stay listed
there's
there?
practically, what is the tax on selling your shares? 0.1%. That has to be the biggest incentive to stay listed, and hopefully the multiple. Right now people are complaining because they're not getting their fair value on the multiples. Any multiple is a multiple of your earnings anyway. So for me, staying listed is it's what would be ideal, but
Yeah.
you have to respect also what owners want to do, and there's ways out that are legal. So to me, it's fair game. We've seen it before.
Fair game. Okay,
And
so
many times they leave at the wrong time because they leave when things are really bad, only to miss the
upside.
recovery.
What do people have to remember in this environment? Apart from that, there's upside there. It's hard to see, but there is light at the end of the tunnel.
There's always, right now we need to put some lights in the tunnel to help us get out of it, right? I think that's the government. The government needs to guide us out of this thing. The government has a huge opportunity to regain confidence of the people after last year's, issues with this crisis. And if we act well and we act responsibly and try to alleviate the hardships of those folks, then that confidence will be regained and we can move on.
Yeah, but people are worried that the government is a bit distracted. I mean, with this massive oil shock, they've got to focus on the poorest of the poor, which is very important at the same time, how do we make sure that the growth trajectory is there and everything that we need to revive growth is
they're
is
doing
in
what
place?
from what I see, the government has gone out to negotiated with many countries in the world.
trade agreements.
We're looking for new supplies of oil. We're negotiating with Iran. The president is opening up oil fields and gas fields for exploration. I mean, this is what we got to do, continue to do that. That's going to attract investment. It's going to help us in our future crises because this is not going to be the last crisis of an oil crisis, right? I mean, and so, again, my own history is when I started working in the stock market, we had 12-hour brownouts. Right, and the market still went up from there, right? So we don't want that again, but but this is an opportunity for the government to step up, and I think the emergency powers was good. How they used them is important. So watching WESM and making sure power costs are fair, watching the gas stations and making sure gas prices are fair, reasonable versus obviously the global price. That's how you want to use emergency powers, I think. And then with the trust of the people, obviously the ayuda will help the hardest hit, and that should be there. But that's how the government can get this trust and confidence back. And if we get it back in a hard time, wow, we can really take advantage of that as we recover.
Realistically speaking, what's your base case for the next 6 months?
As far as
the economy is concerned?
I think we're going to continue to see, again, if the OFW remittances are not affected and BPOs are not affected, which they don't seem to be, consumption should continue to grow. What we will probably see is a delay in the government spending program, whether it's healthcare, maybe they can move. I'm not sure what the plans are there. Education, they wanted to build a lot of classrooms. No reason to not go ahead with that plan. So again, I would expect the next 6 months we're going to see higher prices. We're going to see inflation a little bit elevated. You want to tighten your belt a little bit. Try to save, your travel. If you can do a 3-day work from home type of thing, that would help. So anything you can do to help your own bank account to reduce your expenses would help in time of crisis. So.
Yeah, absolutely. All right, Phil Hagadorn of Atram, thank you very much for your time this morning.
Thank you so much.
We're taking a quick break. More stories when we return. This is Business 360. At the country's main air gateway, a security breach during the post-Holy Week rush is raising sharp scrutiny. A foreign passenger reported losing cash during baggage screening at NAIA Terminal 3, triggering an investigation into airport security personnel. We now go live to Hannah T. at the Ninoy Aquino International Airport for the details. Hannah, go ahead.
Maiki, amid the holiday exodus, 3 airport personnel are now under investigation following a complaint by a foreign passenger who reported that he lost cash or thousands of pesos during the baggage screening here at the NAIA Terminal 3. The Department of Transportation has ordered the immediate investigation and relief of 3 personnel from the Office for Transportation Security, or OTS, including 2 screening officers and 1 supervisor. This comes after an Australian national who was about to board a Cebu-bound flight reported that he lost nearly 9,000 in cash during the screening process. The missing amount, including 7,000 pesos and 1,000 Taiwanese dollars, or around 1,900 pesos. Transportation Secretary Giovanni Lopez has directed authorities to conduct a thorough investigation, including closer monitoring of screening personnel and stricter inspection procedures. Lopez also warned that if any security personnel are found to have committed theft or other violations, they will face criminal and administrative charges. For its part, the OTS says it does not tolerate any form of misconduct and assures the public that those found responsible will be held accountable. Maiki.
Okay, Hannah. This hasn't been confirmed yet. It's still under investigation. How soon before they find out whether this really happened as it's been reported?
Maiki, the OTS said that the 3 personnel are now under investigation, so that's a confirmed report. But on the part of as to when and what the timeline will be kung kailan natin makukuha yung resulta ng investigation, we've yet to find out on the part of the DOTR as well as the OTS. Maiki.
Yeah, and we have to point out this is a rare occurrence. How rare is this, Hannah? And what are the charges? Should they be found guilty?
Maiki, during the Holy Week exodus or the holiday exodus dito sa NAIA Terminal 3, this is the first time that we've heard that there's a passenger who complained about losing cash. So definitely this is a rare occurrence over the holiday coverage here at the airport. And doon sa kung ano yung posibleng kaharapin, since under investigation, they haven't confirmed yet if the 3 personnel are found guilty. So that's one of the things that we are awaiting sa part ng OTS. At so far naman dito sa NAIA Terminal 3, the authorities are also urging passengers to report nga any suspicious activity following this incident, while reminding them to follow airport rules to avoid itong unnecessary baggage inspections. At because of that, according to the new NAIA Corporation, which is the operator of the NAIA, today kasi is expected to be the busiest day across all NAIA terminals this Holy Week, with an estimate of about 158,800 passengers. Maiki.
Maraming salamat. In other news, a critical link in the Metro Manila subway is now moving forward with a 16 billion peso contract awarded for the NAIA connection. According to a report by philstar.com, the Department of Transportation has awarded Contract Package 109 to the DMCI Taisei joint venture. The deal will fund the construction of tunnels and a station connecting NAIA Terminal 3 to the subway system. The project was previously delayed by right-of-way issues, but once completed, it will connect the country's main gateway to mass transit for the first time, a move seen to improve mobility, reduce travel time, and boost economic activity around the airport. The subway is now over 27% complete, with completion targeted by 2032 after earlier delays. The global oil shock is now cutting into the fortunes of Filipino billionaires. Their total net worth fell more than 11% in March to $38 billion. Enrique Razon Jr. lost $1.4 billion. Manuel Villar slipped from 4th to 5th place, while the C family shed $1.2 billion. Tony Tangcatyong, founder and chairman of Jollibee Foods, fell out of the billionaire rankings entirely after previously holding a net worth of $1.1 billion just last February. Now, the war is also hurting ASEAN billionaires. The region's top 150 tycoons lost a combined $62 billion in March, based on Forbes' list on the world's richest people. Indonesian tycoon Prajogo Pangetsu is no longer at the top spot after losing more than 28% of his wealth, bringing his net worth down to $20.5 billion. Claiming the throne is Pham Nhat Vuong from Vietnam, who himself lost 14% of his wealth. Meanwhile, the Philippines' Ricky Razon rose to 7th in the rankings. Losses were heaviest in energy, commodities, and consumer-focused companies, while telecom, palm oil, and tobacco holdings provided some cushion for the region's ultra-wealthy. In other news, the Artemis 2 crew, NASA's first astronaut team set to fly around the moon in over 50 years, is also a reminder of the growing space economy. And even this Easter message comes with a bigger signal. Astronauts are sending warm greetings back to Earth, even staging a zero-gravity egg hunt using dehydrated scrambled eggs hidden around the spacecraft.
Happy Easter to everyone down there on Earth. We wanted to take a minute to commemorate the holiday that we have. This time of year is something that many religions and many cultures hold dear. It's a time of emotions such as joy, as well as solemnness, honoring what's going on both in our world and in our religious beliefs.
Beyond the celebrations, the crew is also preparing for critical mission tests, including a full spacesuit check focused on mobility, leak protection, and life support systems in microgravity. And this is where the business story comes in. These missions are driving demand for advanced materials, engineering, and private sector partnerships. As governments invest billions, the space industry is quickly becoming a new frontier for global competition and growth. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.